Assalamu alaikum everyone. Welcome to Basis Online Schooling. This is your accounting teacher Rizvi sir. Today we are going to discuss about accounting concept from the chapter 7. We have learned 6 types of accounting concept. So one by one we are going to study them. The first one, business entity concept. This concept states that the affairs of a business and the personal activities of the owner of the business should be kept separately. That means it shouldn't be mixed together. Like when if the both accounts are mixed together, it would be difficult for the owner of the business to identify his profit amount of money. So that's why this accounting concept is prohibiting not to mix both the bank account together. Second point, consistency concept. According to this concept, business should follow same method to record an item every year. For example, you have purchased a motor van and you have decided to charge depreciation on it by using straight line basis. But in the future, you cannot change your decision. Like you in the future you cannot say that I will charge depreciation by using the revaluation method. So according to this concept it would be totally wrong. So you need to maintain the one method to charge depreciation for a particular item. Third point, accrual or matching concept. It states that income and expenses should be brought into the period to which it relates. For example, you have paid the rent for the next 3 months of next year. So as we know that we always calculate the current period's amounts or accounts. So what we are going to do, we are going to minus them because it is paid in advance, right? So general expenses or the rent, it would be include an amount which is not related to current period. It means it was paid in advance. In this case, the advance amount should be deducted from the general expenses in order to get the fair value of profit for the year. Number 4 or number D, prudence concept. According to this concept, profit should not be overstated or understated knowingly. It means like you want to charge a depreciation for a particular item, but this year you have decided not to charge depreciation in the account. So in this case, as profit will be overstated because the expenses will be understated. So according to this concept, it will go against this concept. So you cannot do that. Number 5, money measurement concept. It states that transactions and activities that can be measured in terms of money will be recorded into the accounting records. For example, can we calculate? Can we calculate the skill of a labor in terms of money? It's not possible. So there are certain things which cannot be measured with money. It should not be recorded in the accounting book, because in accounting always the accounts comes which we can measure in terms of money. So according to this concept, skill of labor cannot be measured by money. That's why it cannot be recorded. And the last one, materiality concept. In accounting, there are so many expenses happen or occur in the business, like the paper clips you need to purchase the office files, you need to purchase the postage or envelopes, and everything you need to purchase to carry your business. So these are the smallest expenditures. So these small expenditures, if you record them one after one or one by one, or everything you need to mention the name, so it would be difficult for creating the trial balance or accounting records. because for every single item you need to keep a record of ledger accounts, so that would be very difficult. So these small expenditures you can write together. For example, uh, purchasing of paper clips, office files, envelopes, all these items should be recorded together as other operating expenses into the accounts rather than recording it separately. So these are all the accounting concepts. So you have understood. So that's all for today. Assalamu alaikum.